All right, all right. Good afternoon. It is currently Monday, September 16th, 2024, approximately 4:51 p.m. Eastern Standard Time. All right, so what I want to do is take a bit of a deeper dive into part of one of the topics that I discussed in the previous video from yesterday. So when we talk about volume, liquidity, and its importance, I really want to dig deeper into that piece and how the money flow indicator can help us to really, really key in on some key areas and give us an idea of what price may be about to do. So gives us a little bit of somewhat predictability, so to speak. All right, so here's what I'm talking about. So first, I'm going to share the 1 hour chart. Okay, this is the 1 hour chart of USDJPY. And basically, again, just keying in on this area right here, right? This is the area on this 1 hour chart where the most volume has accumulated. So what's going to happen is this isn't going to move. So we see that we have 86.414 million in volume sitting there, right? So the next closest to that seems to be right above it at 68, right? And let me see. Let's see if anything is above that, so to speak. No. All right. So not a lot of volume above that. So this area right here, this high volume area is not going to change until there's another area that has more volume on the chart or on the chart than 86 million, right? So majority of those orders. So what happens is those orders start to close out for whatever reason. Like let's say there's a market shift, market structure change, a shift in, sentiment, right? They'll start to build their orders. Let's say the market is shifting to the upside, right? So they'll start to build their orders somewhere a little bit lower in order to catapult the market further up, right? Thereby starting to close some of those orders that they have up here. Because right now, think about it, right? These traders that majority of the traders that have sell trades sitting right here, right? Well, all of the traders that have sell trades sitting right here are all in profit right now. They're all in profit. So they're not looking to close those trades until they start losing profits, the profits that they have, and it gets too close. Again, all of it depends on a market structure shift, a shift in sentiment. So right now, the sentiment is still bearish, right? Overall, again, majority of the volume here, we don't see a huge buildup in volume, at least on the 1 hour chart, right? Below these levels, right? On these lower levels. Yes, the market is pushing up. Remember, one of the reasons why the market will reject is because of lack of liquidity, lack of volume, right? Again, what that means is there's not a lot of interest, and we can look at the higher time frame, lower time frame, right? There's not a lot of interest in transacting, below this point at the moment. That could change, right? But my point is that this area, this point of control, this area of high volume will not change until there's somewhere else on the chart where the volume is more than this, right? So what that means is, well, what does that mean for your trading, right? So look, again, as you can see, when they were good and ready, they pushed the market quite a bit, right? This market pushed down quite a bit from this area. They stacked their orders and was able to push the market down for quite some time. So it's like kind of like a swing trade because this happened over the course of a few days, right? So a couple days, and again, they stacked their orders and then they were able to push the market down, right? So what you can do, right? What we can do as retail traders is to understand one, that as long as we're below this volume right here on the 1 hour, right? We're not going to really get that big of a move just yet. This area, this yellow area will have to change, right? Now, what happens is, let's say this area does not change. Let's say this stays the high volume area on the chart, right? What happens is if price comes back to visit it, more than likely it's going to reject, right? This is the high volume area on the chart. And this is where majority of the orders, right, are resting for the big players, right? So they're going to possibly come in again, just depending, and reject again, because once they're ready for the market to move up, they're just going to find another spot, again, more than likely lower than here, right, to start the buying process. So we're going to consolidate somewhere lower than where we have our sell orders, right? We're going to consolidate somewhere lower, our buy orders, and get them ready for a push to the upside. That's how that works, right? Now, what's happening is, though, the interesting thing is that this is happening on the lower time frames, right, on a frequent basis, which is why you get, these moves here, right, the up and down, right? You see price moved up, came down, tested this area, created another order block, right, or support area, moved up, right, it came down a little bit. Now we got some consolidation going on for the last couple hours, right? So let's go to the 5-minute chart, right, the lower time frame, and see what this looks like. Very important stuff. I really want us to understand better how this looks, right? What this looks like, and why. Because again, it helps to give us somewhat some predictability. Look at that. I missed it. I missed the move. So look, here's what was going on. This is what I missed. I didn't get a chance. I wanted you to see it because, all right. So exactly what I was just telling you. This is what prompted me to want to do this video, because this is what's happening on the lower time frames at a quicker pace, than the higher time frame, right? So look, here's what was happening. So this yellow line wasn't here. So this area wasn't painted yellow. It was down here, right? We had it was roughly like 3.6 million or something like that, right? This is the 5-minute chart, USD JPY. So this was the high volume area. Yeah, it was like right down in here somewhere, where it just recently was, right? And so I was looking at it and I was like, oh, it's about to change. It's about to change. So I didn't get a chance to get down to it so you could see the change, but as you can see, it already changed because I saw it stacking up. It was stacking up. So we're stacking volume right here, right? For what purpose, right? It could be either to push the market down or to push the market up. Now, looking at doing some analysis and everything, I'm of the mindset that we're going to push up. Now, the market is about to close and reset, for another session, right? But again, I wanted you all to see this because this is the 5-minute. Remember how I was telling you that the 5-minute chart, the 5-minute time frame, and the high volume area zones on the 5-minute are indicative of the volume that's coming into the market today, right? Again, and you want to see those shifts because the high volume areas are going to shift based off of market movement. And you can see where, again, the market created this bullish movement right here. So look, again, a lot of orders right here, right? Same thing happened, right? We stacked some orders, we pushed the market up, right? Now we're stacking orders right here, right? So again, remember these zones right here, these are my real order blocks. This is really where I'm stacking orders at. But again, remember, this is the 5-minute time frame, right? So we have to make sure what we're doing is in conjunction with the higher time frame, right? Our 1 hour, right, or what have you. Now we see the market just changed sessions, so we're at 5 o'clock now. So all bets are kind of off right now, but I just wanted you to see that again, looking at this 5-minute time frame can help to start give you some predictability into what the market may be getting ready to do. Just watching again, because I want you to really start paying attention to this. So now what you do is you look at the other areas on this price chart, right? Where are some of the other high volume areas? Where are some other yellow points if there are any, right? We know that there's none on the 1 hour, right? So that area is going to stay there for a while, right? But here we have several, right? We have several to kind of pick from, right? So what this kind of means is that basically when price comes to these levels, it may have a reaction. We see that this level kind of lines up, you know, with this fair value gap. So price can come in, fill these orders in this inefficiency right here, and then push back up. We don't know. We don't know how that's going to work out. But again, these are your real order blocks and your real areas of significance and points of interest and stuff like that. These areas where there's real volume, right? So remember, the price rejects for one of three reasons, right? Not enough volume and or liquidity, right? We see we're rejecting here, right? And you always look at the higher time frames to see what's going on, right? But when you look at the higher time frames, you see lack of volume and stuff like this makes more sense, right? So a lack of volume, right? Or a lot of volume, right? Okay. And then fair value gaps, right? These are the reasons that price will react and reject. So when we're doing that on a higher time frame, it holds more weight. Lower time frame, we need to be aware. So again, for our daily trading and our daily setups, right? Again, we're kind of taking them off the 1 hour, right, in the daily because we want to be trading in those directions, right? Don't forget that we want to trade in the direction of higher time frames because we want to get more pips, right? But my point is to understand and watch how the volume, the high volume area may change throughout the day on the 5 minute. And again, you want to be sure that you're ahead of that. And again, one of the ways to get ahead of that is to start looking at, okay, where's price and is it in the area or where's the next area that price seems to be going towards where there's a high volume, right? So now I got to start to understand, okay, I know that when price comes back down to this area, we might have a bit of a reaction. Again, it coincides with this fair value gap, right? Now, if price breaks through this fair value gap right here, we're going to come down. We're able to move through the blue areas a little bit, right? Because those are like medium volume, average volume, right? So those don't really stop price from moving all that much, right? But we start to turning a little yellow when we get right here, right? So again, what do we have here? Another fair value gap, right? Right? It spans this entire area. So now I might start to have a reaction in this area once price gets back down here. So now I might want to start looking at the opportunities, buying opportunities when price is getting to these areas or whatever the case may be, right? But again, I wanted to put this on your radar to make sure you understand what I have come to understand, that again, the price movements on this 5 minute chart you know, can dictate on the day to day, again, for those that are day traders, and not confuse it with the high volume areas on the 1 hour where we typically, you know, kind of base our trade setups off of, right? Again, good to know what's going on down here because that may change during the day, right? In my trading session or what have you. So I want to know exactly where the volume is today and right now, especially when I'm looking at my trade setups. And this is one way to help you to do that. So I hope this has been comprehensive. I hope it all makes sense to you. And at the end of the day, it's about making dollars and cents because we're about to get to this bag. Good trading to you.